Professor Chan is the Secretary for Financial Services and the Treasury for the Government of Hong Kong. He specializes in asset pricing, evaluation of trading strategies, and market efficiency. He's also published numerous articles on these topics. Thank you very much.
Well, thank you so much. Good morning, ladies and gentlemen. It's a great pleasure for me to be here, and thanks for coming to this seminar organized by the Hong Kong government with support of the regulators, HKMA and SFC. For me, it's really a pleasure to be back in London in a few months, because in a few months' time, I was here in London in June, and I'm back here in November, and I always feel excitement by being here. And London's a great city. When you get off the plane, you always just hit by the vitality of the city. And as you go in town, you see you really see the city and its excitement in the air here. Now we are doing a finance conference here because London is a place to be. London has always, in my mind, led the global financial markets. It is a trendsetter in the direction of financial services and the innovator of financial products. And London has always been a benchmark maker when it comes to financial market regulation. Everyone, including myself, when we come to London, we are in awe of the international pool of talent London has assembled. And London's success in the financial market is due to all these factors. And London is a role model for what a financial hub should be. And I want this audience to understand how much we appreciate what London has done for financial markets. Now, of course, today, after the financial crisis, some people question whether London can still retain the leadership in a global financial center. I, for one, believe that any worry like that is much misplaced. I believe London will always remain an important international financial center for the world, especially for Europe. And because London has the solid foundation in terms of its financial infrastructure, the strength of its financial market regulation, and the openness of its market. Now, of course, the global financial crisis has caused a setback in the development of global financial service industry. The new regulation that's formulated post-crisis have added cost and uncertainty to the industry. But I believe nothing will detract from the financial industry being the pillar of the economy, of the global economy, because we need the industry to facilitate economic growth and add value to the business. And the basic economic reasons for the emergence of global financial centers have not been shaken by the crisis. The global trade, the technology of trading, the capital movement around the world, the regulation of single market. This is all there. And I believe London will continue to fill the role of these international financial centers. Now, by coming to London, meeting this audience, we also want you to tell a story about Hong Kong. I believe Hong Kong has the potential to be a very important international financial center. Now, there's a great deal of similarities, actually, between London and Hong Kong. We have many strengths in common, and they lay the foundation to this international financial center. These include the freedom of movement of capital and freedom of information in Hong Kong. This includes a common law system that we have in Hong Kong and a very robust regulatory regime in both Hong Kong and London. Now, Hong Kong, of course, has some other advantages. Our unique advantage in a simple and transparent taxation system and our time zone advantage in a global trading platform added to the appeal of Hong Kong as an international financial center. Hong Kong and London have followed similar paths in the development of our financial markets. We consistently rank alongside, side by side, in many international rankings of international financial centers. This includes the Global Financial Center Index. This includes the phrase or the word coined by Fortune, the Lai Long Kong, London and Hong Kong being two of these great top three global financial center cities. And London and Hong Kong are both important asset management centers, managing significant amount of overseas money. And in Hong Kong, the relatively new development of the offshore renminbi market has added another resemblance between this city and our city, because we are both offshore markets to a currency that's not our own. Now, if you recall the history, half a century ago, the euro-dollar market started to develop in London. Today, the amount of US dollar in circulation in the London market is 2 or 3 times the amount of US dollar in the US domestic banking sector. Hong Kong's offshore RMB market is still at the infancy stage. The size of the RMB market in Hong Kong is about 1/500th of the size of the onshore RMB market. But this only goes to show you the potential of our offshore RMB business has in store for us. Whilst our two markets, London and Hong Kong, may compete for some aspects of global business, but the primary focus of our two centers is to serve our respective regional economies. Hong Kong will always play an important role for Asia and for China, in the same way London has done for EU. I will quote the British Chancellor of the Exchequer, Mr. Osborne, who remarked in Hong Kong last week that London is a partner of Hong Kong. And I can't agree more. We are both pulling our weights in our respective markets, but we can serve our clients better where we partner up. Hong Kong has always been described as a gateway to China. It's certainly correct when you think about the movement of goods, people, and even capital. Hong Kong has always been and still is the largest foreign direct investment provider into China. But Hong Kong serves as a gateway in another sense. Hong Kong has always been a testing ground for new ideas in the opening of China's financial market. Experimentation done in Hong Kong has heralded much bolder reforms done in the mainland, which have contributed to the success of China's economic development strategy. And let me quote the example of the equity market. Take a look at the history of the listing of Chinese companies' shares in Hong Kong market. Now, back in 1993, we saw the first Chinese company listed in Hong Kong, the Qingdao Brewery. Back then, China had no capital market. All the companies in China were state-owned. There was no corporate governance structure, and companies did not have international accounting standards. And Hong Kong saw the opportunity, provided and actively lobby for the listing of Chinese companies on our stock exchange. And the central government of China appreciates that having Hong Kong listing will bestow investors' confidence on the mainland companies, and the established market discipline in Hong Kong brings them international best practice standards in corporate governance, accounting, disclosure, and management. Hong Kong listing also gives them, of course, attractive valuation and access to a deep liquidity pool internationally. And Hong Kong, of course, has a lot of professionals to help advise its companies. Another example is the Chinese state-owned banks. The Chinese state-owned banks were previously considered inefficient in operation and offer very low return to the shareholders. And Hong Kong has played an important role in the reform of those banks. All 4 state-owned banks were listed in Hong Kong market in recent years. The IPOs received good valuation, and these banks have gained reputation on a corporate governance standard and regulatory standards. There has been no stopping ever since the first H shares listing in 1993. As of the end of September this year, 556 mainland companies were listed in Hong Kong, raising a total of $351 billion US. And last year, Hong Kong ranked number 1 in the world for IPO funds raised. In 2009, the total fund raised was $31 billion US, and the IPO funds raised this year will exceed that number.